This is an interesting time, no doubt. There are trends which we can pick up in the data and project what the future has in store for particular industries, jobs, output, and the details in between. But the crisis of 2020 has clearly shifted everything into a state in which many trends have accelerated rapidly and others have slowed down. We need to know if these trends are more or less permanent, or are we simply waiting for the magical V-shaped recovery to appear? You came here for the truth, so let me unveil that for you. I've got an interesting video to get into today. I've got facts related to the Fed's balance sheet, which, by the way, has accelerated above $7 trillion again. We're going to look at some of the statistics around that. I want to show you what's happening with the economic factors. We're going to look at how this crisis in 2020 has changed the way that businesses operate. Okay, so I've got a lot of information related to the economy in this one, everything into one video. Let's begin. Fed kicks off Main Street lending balance sheet top $7 trillion. You weren't worried that the Federal Reserve wasn't going to print any more money, were you? Well, of course, they're just going to take some time here and there. We had seen 4 weeks in a row of declines in their balance sheet. Can you believe it? And now here we are today seeing it increase yet again. They want this balance sheet to increase. They have stated that publicly. They want this to be projected out there with their forward guidance, making sure everybody's on the same page. The balance sheet will increase for the foreseeable future. Interest rates will remain at zero forever. And that's simply what they're trying to project out there. And it has done very well, because even before they start these programs, simply by announcing them, investors have been piling into those trades. And we have watched the copycats take place, and they have benefited from it as a result. Buying up all the junk debt, seeing all the companies that have taken on excessive risk as a result of this, knowing that they are going to be bailed out, essentially. That's what it is. So they don't have to worry. Here's the balance sheet when you look at it on the chart directly from the Fed's website. And I just wanted to make it very clear that we had seen 4 weeks in a row of declines, and now it has expanded somewhat. The information from this site is just slightly older. It's showing you that it is updated on July 16th. The data itself comes from the 15th, but I will show you the H41 in just a second. That gives you the most up-to-date details, and you can see it has accelerated over $7 trillion. Does it even matter at this point? Give or take a trillion, round off a couple zeros. It's all massive numbers anyway. It's all funny money anyway. It's all zeros and ones in a computer anyway. But of course, it does matter, because what they do affects you, your savings, your retirement, and your livelihood. So here is the H41 directly from the Fed's website. Remember, I always show you the sources themselves. There are so many other channels out there. There are so many other news, if you can call it that, organizations that do not give you the sources, that do not give you the facts, and they especially don't want to empower you to learn on your own, so that you can just go to a search engine and type in the word Fed and then H41, and it's the first link that comes up. No, they make you come back for more, of course, because they want the advertisements and so on. Why not just give people everything and do your best to make sure that they come back? Why do you have to trick people? This is the way that these different people operate, and I'm not about that. If you scroll down here, you can get all the details, really just showing you, highlighting exactly what's going on. This just gives you an explanation. I've shown this many times before, but you can see the Treasury securities, and we go down to the different loans. They got the primary credit, secondary credit, so on. Here you will see that it is officially over $7 trillion. Remember to check this out as often as you possibly can. Don't go to Reuters to get that. Don't go to Bloomberg to get that. Don't ask your neighbor or your barber. Just go to a search engine, type in Fed H41. I have highlighted all the details of how to get the central bank balance sheets, all of that information many times before, not just for the Federal Reserve. Well, this information I do believe is the easiest to access. I've given you all the other examples before. Now we have an interesting dilemma today, and it's not the first time this has ever happened before, but it is curious. Today we can see the S&P 500 absolute performance since the start of May. The green line, that's the daytime session. The red line, that's the overnight session. And clearly there is a massive discrepancy in between the two. From the start of May up until now, all of the gains are in the overnight session. There are a lot of other examples, like within gold, for instance, that there is clear and utter manipulation when we're talking specifically about the overnight session. Now, this is really the big news of today that I wanted to bring to you and highlight at this time. Work from home culture will cut billions of miles of driving. Study finds online retail and remote work will hurt auto sales. This is something that I have talked about over and over again this year, and now there is some real data behind it, so I'm glad that I can bring it to you. KPMG did this study, and you're going to see it directly from the source. It is quite interesting. Working from home and online shopping have become the new normal, and that will reduce driving in the US by up to 270 billion miles a year. For starters, the decline in commuting will remove 14 million cars from US roads, and that of course has a direct impact on the auto industry. That's the first thing. That's very clear, that's very obvious. That means less cars are going to be needed to purchase. That means less total volume on the road, perhaps less gasoline, perhaps less maintenance that's taking place on these vehicles overall. Less salesmen are needed in total. The showrooms and everything that's connected directly with the auto industry, okay? That's one thing. But then you go out a step further and think about how this affects the economy as a whole. Because a lot of people are working in this industry, and suddenly if there's less demand, there are less people going to be needed. They fire them, they don't rehire them. And that puts further impact because these people here, they've been doing this job for a long period of time. Now they can't get work. What do? Are they going to become a cashier? Retail's not doing good either. Are they going to become an Uber driver? Uber Eats driver? What exactly does the future have in store? Well, what we are seeing here isn't just a temporary instance. It's not just a bump in the road. For certain sectors, for certain factors, yes, of course. But when we look at the auto industry, this is something that looks like it will have a permanent impact. Here's the document directly from KPMG's website, and you could see on the left-hand side, every year Americans drive, I couldn't believe this, 3 trillion miles in cars. After almost 60 years of largely uninterrupted growth, vehicle miles driven, VMT, you'll see that referenced on the right side, in the US will drop in 2020, and we estimate that enduring changes in driving habits could lead to a 9 to 10% drop in VMT. That would have a significant impact on the auto industry and beyond, as I just mentioned. So the way I see this happening and the way that the data has shown us here is that, of course, when everybody was stuck at home, driving miles plummeted. The expectation is that this comes back up, but never to where it was before, or at least not continuing on that trend line again. So where we are uncertain, where the questions are, is simply how deep is this and when do we start growing again? VMT decline. In April, total VMT dropped an unprecedented 64%. The most important factor has been a sharp reduction in commuting and shopping. These emissions, which account for about 40% of the 3 trillion miles Americans log each year. That right there is so big. Of course, there are more and more people that are using e-commerce, that are shopping online. The trend had been very consistent all along, and it was somewhere between 10 and 11% depending on the statistics you use. Now that jumped up significantly during this period, and I think it was more like 20%. And while the expectation is that this will return to normal, as they say, coming back down, I don't think it will go back to this trend line of 10 to 11%. I think it will be persistently higher. That means less people on the road going to buy things that are now delivered to you elsewhere. They still need to be delivered to you, but now instead of 50 people going out to buy one thing or the other, where you have one single truck on the road and it's delivering it to you and your neighbors. There's much more to it than that, but of course, just trying to highlight a simple point. In here, they do highlight some of the points I was trying to make earlier, but essentially what we're looking at, I'll just touch on the subjects that they're discussing. Less commuting and shopping, less need for cars, huge second order effects. And essentially what they're saying here is lower car sales, fewer replacement parts and aftermarket sales, lower gas tax receipts for states, etc. So this really, to me, is the big news because it has a shift that nobody was ready for, that nobody was prepared for, that nobody anticipated. Perhaps you could say long-term trend, this is where it was going anyway. More people working from home, more teleconferencing, more video conferencing, more people able to work remotely from different scenarios, online shopping and e-commerce and the way that things are changing and people's habits and so on. But the trend has undoubtedly accelerated. The crisis of 2020 cost jobs at a third of small firms open in May. This is interesting here. Look at this. One small firm in 3 around the world was obliged to cut jobs to stay open through this crisis. Further down in the Reuters article, they make a few points. Some 26% of small and medium-sized businesses said that they closed between January and May of 2020. The survey polled more than 30,000 small business leaders from more than 50 countries. So it is a significant survey that was done. Sometimes you get ones that cover 500 people or 1,000. This is much more widespread. As always, just gives us a little peek into what's going on, but it's important nonetheless. Out of the businesses that remained operational when the survey was conducted on May 28th to 31st, nearly 2 in 3 cited lower sales in the previous 30 days compared with the same time a year earlier. Of course, everything basically has fallen down significantly because people were just staying home. They didn't know what was going on. They're just waiting here. That goes for restaurants, that goes for retail, that goes for automotive, airlines, everything. To deal with what the report called the challenge of a lifetime, a third of smaller businesses surveyed that were in operation during the poll said they had reduced their labor force. This is big because right now in the US specifically, over 50 plus million people had filed for their initial claims. Now that just shows you how much unemployment there really is. Think about all the people right now that are working something, they're working some job, but it's not the job that they want. The salary is significantly lower, the hours are reduced, but hey, they gotta pay the bills, so they take what they can get. This is the situation that we're in today, here in 2020. But you don't have to worry because Fang stocks are doing so well. I just wanted to give you an update really quickly. You can see the Fang stocks, they have come down from their absolute peak, but of course still rocketing higher at this time here in 2020, particularly towards the end of March. They've been just unbeatable, it seems. This right here shows you the CBOE equity put call ratio, and it gives us the impression that investors are the most complacent they have been since the year 2000. That is not a good thing. The market has been very, very wild here in 2020. We went from extreme pessimism to extreme optimism, and those variances are in a very narrow period. If you think about it, a couple months later and all of a sudden everything's changed, that's not healthy. I just wanted to read this quote here from Jamie Dimon. I believe this is the same call that they're referring to that I quoted in my last video. Apparently, he was just, if not more, skeptical that the recent pace of improvement in the economy will endure. Quote, "You're going to have a much murkier economic environment going forward than you had in May and June. You're going to have a lot of ins and outs. You're going to have a lot of people that are scared. They're going to be scared about the economy, small business, big companies, bankruptcies, emerging markets, so it just could be murky." And I really do agree with that. That's the state we're in now. If you look at the stock market, you don't see that. In the economy, it's clearly there. You get it with all these different surveys. You ask the businesses, this is what they're dealing with right now. And whenever there are a lot of questions, it really subdues what we can see with growth. That's a fact. That's all for this video. If you found it informative, please give me a thumbs up. When you do, you are supporting me. So I want to say thank you to all those who do that. If you want to check me out on Instagram and Twitter, I'm putting information up there every single day. So definitely check me out at The Money GPS. Do you want to learn how to sell stuff online? Well, of course, there are a lot of courses out there for $1,000 plus. If you don't want to spend that kind of money and you want to learn for free, I've got a completely free e-course, the AmazonGPS.com. If you want to understand the financial system from top to bottom, A to Z, I've got it all in these 2 books. You've got to check them out at the link in the description if you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? It is absolutely jam-packed with information. Definitely click on it and I'll see you there.